There's been a lot of talk lately about what is a security, what is not a security, what cryptocurrencies are currently being labeled as securities by the SEC, and where the SEC stands on all of these allegations that they've made, the lawsuits that they've posed to the courts. I want to discuss that, but I want to do it by looking at a recent interview with the CEO of Coinbase, Brian Armstrong. So let's dive into that, and I will just break apart the entire interview and give my thoughts. Please keep in mind that I'm not a financial advisor. I'm also not a lawyer, so take everything that I say with a grain of salt. I'm just a guy that's been in crypto for a lot of years, and I love this community. I love everything that cryptocurrency stands for, and I try my best to represent this industry. So if that's something that you're interested in, please be sure to hit that like button if you enjoy this video, and if you haven't already subscribed, please definitely do that because it really helps my channel out.
Coinbase CEO Brian Armstrong is in a battle with regulators. The SEC sued his company, saying Coinbase broke the rules by listing tokens that the regulator alleges are subject to securities laws. He sat down with the Journal to discuss the situation. This doesn't seem like one where there's a lot of dispute about the facts. You're trading cryptocurrencies on Coinbase. The question really is, are you breaking the law? And is what you are trading a security? So take us through how you think about this case from a legal standpoint. We're not disputing facts here. We're disputing interpretation of the law. What's your interpretation of the law?
Well, okay, so let's zoom out for a minute. So if we go back to 2021, Coinbase, we wanted to become a public company. We described everything about.
Okay, before we go any further, I just want to say that that was a very loaded question. He said that we're not discussing the facts, but that is what you have to discuss with this, because the truth of the matter is the SEC and the CFTC have not been clear on the ruling of the law and how it's currently written. And there haven't been any cases that, and Brian will talk a little bit more about this, but there haven't been any precedents set in a court. So those are the facts. The fact that he is saying that it's based on interpretation, no. If that's the case, it's because of the SEC, not because of Coinbase. So I just wanted to get that out of the way.
Our business, the assets that we list on our platform, how we do staking. And the SEC at that point allowed us to become a public company. And, fast forward, a year later, we started to hear some conflicting statements from the SEC, the CFTC. Generally, when we hear updated information from regulators, we go in and we talk to them. We say, great, if the rules have changed, how can we adjust? And, an example of that was they said XRP we think might be a security. We said, okay, we want to act in good faith. We'll delist it. We don't know if it's a security or not, and that court case is still playing out. But we want to be collaborative and work with regulators. And then something shifted about a year ago. A totally different tone started to happen. And we kind of got this information from the SEC that, well, actually, we think everything other than Bitcoin is a security. And we kind of said to ourselves, well, that's not our understanding of the law. How are you coming to this conclusion? And we were sort of met with silence, right? We did a series of meetings with them, probably 30 meetings over the last 12 months. Where they asked us every question under the sun. We kind of, told them everything we could about our business, but we didn't really get clarity from them about how we could come in and register, which assets they had a concern with, why there's contradictory statements between them and the CFTC. We didn't really get any feedback from them. And suddenly we got this Wells notice and then the complaint that was filed yesterday. So basically we're in this environment of regulation by enforcement. I don't feel like there's a clear rule book. The only sort of high-level statements they've made is that everything other than Bitcoin is a security, which that's just not what it says in the law. And by the way, that would also kind of mean like the end of the crypto industry in the U.S. if that was actually what happened. And so we have to go to court to challenge that. We're proud to do it for the industry and for America.
But this has been something that has been hanging over the industry and Coinbase for a while. The SEC is far back as the previous administration, Jay Clayton, had been saying things about, hey, some of these things are securities that are being traded out there. The SEC.
Notice this guy's posture. I don't know who this guy is that's interviewing Brian, but notice his posture. he is in a very tense posture and almost a combative posture while he's doing this interview. You can tell that the questions that he is asking, he's doing so in a very combative way. And Brian is doing a really good job of basically taking the high road and saying, I understand what you're doing here with these very loaded questions, and I'm not going to play ball with you. I'm going to answer to my utmost ability while also making sure that I don't say anything that could incriminate me or my business.
He has written papers about this. You in your S1, when you filed to go public, put down as a risk, the SEC may decide that the stuff that we are trading is in fact a security, and there are onerous and difficult registration obligations that we would have to do should the SEC decide this. So it isn't like this sort of came out of nowhere. This was something that had been over the industry for a while. Mm-hmm. But you pushed ahead anyway and built a business and grew that business and added more tokens and added more assets. Tell us why you did that.
Yeah, well, there are certainly crypto securities out there. In fact, Coinbase has reviewed, well over 1,000 different assets. 90% of them we've rejected, right? Because we thought some of them could be securities, or we had other concerns about them. So we've really only listed a very conservative, small number of the assets out there. And so I agree with the statement. There's a lot of crypto securities out there. In fact, I would like there to be a robust, healthy market for people to trade crypto securities in the U.S. I think this is one more area where crypto could help update the financial system around capital formation. And we should make it easier for people to raise money for their company or for something they want to build in the world, and those should be issued and registered as crypto securities. We filed a petition formally with the SEC to try to get clarity about how that could happen. We acquired a broker-dealer license, which is dormant because we haven't found a way to activate it with the SEC. So I would like there to be a robust market for trading crypto securities. The 10% or less of assets that we reviewed that we did decide to list, we feel that those are crypto commodities. And so they don't need to be registered and traded with under an SEC license.
Let's back up a little bit for people who are not so in the weeds on all the various minutiae here. The SEC has alleged basically that you are running afoul of the rules in three ways: that you're a broker-dealer, that you are a clearinghouse, and that you are an exchange. All three of those things, the SEC requires that you register and take a bunch of actions. You aren't doing that. There's no dispute that you are not any of those things. Is that right? Or is there any dispute that you are acting as a broker-dealer, acting as a clearinghouse, and acting as an exchange?
No, we don't claim to be a broker-dealer, or we've acquired a broker-dealer license that's still dormant because they won't allow us to activate it. But for the assets that we do trade, those are commodities, so they don't require those registrations.
They don't require the registrations, but we're not disputing what you do. What you do is function as an exchange, function as a clearinghouse, and function as a broker. The dispute is around whether what you are trading.
See how he keeps loading his questions? And he's got this head tilt, glaring look on his face, almost like he's waiting for Brian to slip up. And so he can say, aha, I got you. But Brian is staying cool, calm, and collected. And it's kind of funny because he's answering all of his questions, but it almost seems like the interviewer doesn't like the answers that he's getting, even though they're factual.
Clearing and broking is indeed something that's under the SEC's jurisdiction, right?
Yeah, we're trading on our exchange crypto commodities today.
So let's zoom way out again for people who might not be deep into the minutia of this. So the question of what is a security, you can think about it in a whole bunch of different ways, and there's case law on this. But to zoom way out, you've got baseball cards at one end. Mm-hmm. You've got Apple stock on the other end, right? Baseball cards, clearly not a security. We trade baseball cards; they have value, but nobody thinks that a 1987 Topps Darryl Strawberry is a security. Mm-hmm. Apple stock, clearly a security. Big gap between those things. Mm-hmm. Bitcoin looks like it's more over here, closer to a baseball card. And the SEC is making arguments that a bunch of things that you trade on Coinbase are more over here, closer to Apple, that they're company-like things. They're companies that work on these protocols that issue these coins. Mm-hmm. They issue the coins to people who expect that they get a profit from those coins. How do you think about that distinction?
Right. Okay. So I'll just clarify up front here. I'm not a lawyer, right? So
Okay, before he answers that question, I have a couple of things to say. I really like this question, and I think that it was worded beautifully, honestly, by this interviewer. But I want to say that I personally believe that a majority of cryptocurrencies out there are not securities, and here's why. In order for something to be labeled as a security, it has to go with the Howey test. And basically, what that states is that somebody is making a profit off of something based on the work of others. And that cannot fall in line with a truly decentralized network. So if a cryptocurrency is decentralized, which most of them I would argue are, then it wouldn't fall under that classification. That's why the SEC has had a very hard time labeling Ethereum as a security, because after its ICO and launch, it became a decentralized network. But let's continue.
I'm going to do my best to get to touch on this.
But you have had a lot of time and have had to do a lot of thinking about this topic.
Sure. This is a deeply technical topic in the law, and I'll tell you my interpretation of it in a second. But it's worth noting that, you know, in the United States, we have a securities regulator, the SEC. We also have a commodities regulator, and so partly this is a major topic of debate in the U.S. is like, which one is it? You know, it's. But in other countries, like in the UK, for instance, they just have one financial regulator for both, and it's funny, they spend like 1% of their time even discussing this issue as some sort of like kind of wonky, you know, interesting topic. But it's a massive issue in the US just because we have two separate federal regulators, and there's kind of like a turf war, political, you know, power sort of battle happening, which we feel like we're caught in the middle of. So anyway, with that as a backdrop, there is this thing called the Howey test, right? Which is the definition of a security, and it kind of says, you know, is there an investment of money in a common enterprise with an expectation of profit based on the effort of others? So it has those kind of four prongs. You can spend, you know, you can twist yourself into knots, kind of teasing it apart. But the important thing to know is that all four of those things have to be true, right? So you can imagine there are things that, like you mentioned, baseball cards. There's other things that people invest in, even with an expectation of profit, like let's say a Picasso painting, right? That they hope to make money on. They hope it will go up in value, but that's not a security, right? Because it's not based on the efforts of others. And so there's various.
I just want to throw this out there that art is one of the biggest loopholes when it comes to this law. When we're talking about securities and commodities, art is one of the biggest commodities that wealthy people use to trade with. And when I say that, you can look at incredible examples like Oprah Winfrey buying, you know, a multi-million-dollar piece of art and then selling it for like $100 million more than what she paid for it. So there are a lot of great examples of that, and I'm glad that he brought that up, because you do have to look at things like that when studying these types of cases.
Ways that, you know, you could imagine a crypto asset would not be a security, right? If it's sufficiently decentralized, there's no common enterprise, right? If there's some specific utility around it, it's not just for the purpose of, you know, the value of going up, right? And so what we need in the United States at this point to get regulatory clarity, unblock this issue, get rid of the turf war, is regulatory clarity. And I think what's going to have to happen now, since the CFTC and the SEC have not been able to sort of, you know, figure this out, is we're going to have Congress step in and draft legislation that will unblock this issue in the United States, or we're going to have the courts create more case law, which is partly what we can do by going to court with the SEC here. Is it's just helping get case law created. I've been really pleasantly surprised to see that there's now draft bills being created in Congress. Congress is very aware this is an issue, by the way. They're worried that the U.S. is going to be left behind, because while this kind of back and forth fighting is happening, you know, the UK, Singapore, Hong Kong, like the UAE, every financial hub in the world is kind of saying, hey, we want to be the future crypto Web3 hub, and we have clear rules. You know, Europe just passed comprehensive crypto legislation way ahead of the US. So usually we think of ourselves as kind of innovative leaders around technology in the US. We're taking notes now from Europe because we haven't gotten this figured out. So
I want to come to what the rules should be and what you think they should be and how they should be changed down the road in a second. But I want to stay for a little bit on what the rules are now, which is what we have to deal with. It's what the industry has to deal with. There are rules now. The rules are subject to interpretation. Obviously, you will be. It sounds like you will be taking this to court pretty hard, and there will be a trial and a discussion and litigation about what the rules are. I assume that's where you're going with this. So under those rules, I'm going to pick out a couple of things that the SEC has said. The SEC has said that there are 13 tokens that are cryptocurrencies, crypto assets, or whatever you want to call them, that you are trading. They say actually at least 13, but they name 13 that they say are securities, and they provide some detail for them. And in a couple of those cases, from reading the SEC's complaint, it looks a lot like a company selling stock. So they bring up the example of Solana, where there was a fundraising. They sold these tokens. Investors bought the tokens. They told the investors, we're going to use the money that you give us to grow and develop the platform. We're going to hire engineers. We're going to build stuff. And in return, we're going to reduce the supply of tokens so that the tokens that you hold become more valuable. That sounds a lot like a company selling stock. How is that not, in your view?
Right. So you're right. The SEC complaint sort of said, of the over 200 assets on our platform, we have a concern about these 13. So it was a relatively small percentage. But to answer your question directly, so again, if any of those four prongs of the Howey test are invalidated, it may not be a security, right? And again, this is something the courts would have to kind of really dig into. But an example would be, in the Solana case, right, let's say that if something has sufficiently been decentralized, that could be an argument, right?
But there are founders of Solana. There's a Solana Labs. There's a Solana entity.
Sure. There was a founder of Bitcoin too, right?
Maybe. We don't know.
And Ethereum, right?
This is a really important part to dig into because this guy is basically claiming, and he's taking the SEC's standpoint and saying, okay, because they had a fundraiser and they said that they were going to do all of these things and that they mentioned the fact that the price of the asset should go up because there's going to be deflation on the asset itself, it should be labeled as a security. But the point that Brian is trying to make is that you have to hit all of the points on the Howey test for it to be labeled as a security. And if something does truly become decentralized, while some people might say that Solana is not decentralized at this point, but that's neither here nor there. If something is labeled as decentralized, then it can't hit all of the prongs of the Howey test, and therefore it cannot be labeled as a security. So this point that he's bringing up right here is very important, and it's something that I brought up earlier in this video.
So this is actually an interesting sort of nuanced point. Some things could be a commodity from day one. Other types of crypto assets, they may start as a security because they're just raising money for a project. That could be something in the future. But then as that project launches and it decentralizes and it develops utility, it may actually convert to being a commodity at some point, right? This is actually an important part of the law that's unclear right now. And for instance, the draft bill that we saw come out of Congress last week from McHenry and Thompson, they start to try to address this issue of how and when would an asset that started as a security become a commodity, right? So anyway, there's a lot of details where in a moment in time you have to look at it. It could be different a year later. Anyway, with every asset we've listed on our platform, we did extensive diligence. We did I think it was like a 72-point legal analysis. We rejected 90% of the assets. Every asset we decided to list, we felt there was a strong argument that it was a commodity, and that's what we're going to go to court to win on.
So you looked at thousands or 1,000 tokens, you listed 250-ish of them, and the SEC has a problem with 13, at least 13, but they highlight 13. So, but the issue is you have to bat 1,000, right? You can't have any securities. You've got to have all 250 that you trade can't be securities. Otherwise, you're running an unlicensed securities exchange and an unlicensed clearinghouse and an unlicensed broker. So it seems like
this is another really loaded question because without proper clarity and the fact that there has been none previously, it's impossible to meet that goal of batting 1,000 in the analogy that he's using, because The precedent has never been set before. This is a brand new asset that can't really be justified based on a securities law that was written in the 1930s. So his analogy, I think, is way off base on this question that he's asking.
It's like the odds are kind of not in your favor.
So that's not really how I think of it. Remember, the goal of this lawsuit is to get clarity for the industry, right? And we've actually been formally petitioning the SEC for clarity.
Well, the SEC's goal is to stop you from breaking the law in their view. It's not. I don't think they think that there's a lack of clarity in the industry. I think they think that you're breaking the law.
Well, that may be what they say, but I can assure you there's a huge lack of clarity. I mean, every startup in the crypto space is spending huge amounts of money on legal, lawyers who basically tell them, I don't know, there's no case law. We can't really give you a clear answer, right? And the SEC has really failed to kind of publish a clear set of guidance. You may have seen in front of Congress, Patrick McHenry asked the chair just a very simple question on one asset. Is Ethereum a security or commodity? And over again, he refused to answer. I mean, so even on some of the biggest assets, they can't just give you a clear answer. But yeah, going back to the prior point I was going to make. So, our goal with this court case is to begin to get clarity for the industry, not just for us, but for the whole industry, honestly, for America, so that it doesn't fall behind in this area. And so, if we get any kind of clarity from the court, regardless of the outcome, honestly, I think it would be a step in the right direction. But we feel strongly all of the ones that we listed there, since we took a pretty conservative approach, they are commodities.
Now, in the process of assessing which assets should be listed, that was something that your company spent a bunch of time on. You participated in some of these discussions. To describe the process, how does that work?
So actually, there's a committee, a digital asset listing group, that decides this. I'm actually not on that committee.
You don't participate in those discussions?
I helped design and give input on the process and how it was designed originally with lawyers, but I'm not actually one of the decision makers on the listing process intentionally. And so the thing that committee does, every asset that we review, we look at a number of factors. So one of them is this legal analysis about, is it a commodity or a security? And we've developed our own internal framework for that. We've shared that with the SEC. We shared it with them before we went public. They've been well aware of it for many years. We also look at the cybersecurity, kind of the credibility of the token. Some of these smart contracts could have issues that might harm customers, and so we do a cybersecurity analysis. We also do a compliance review of the asset and the founding team. So based on that, the committee, which has a diverse set of skills of different people in finance and cyber and legal and all kinds of things, they make the listing decisions.
The SEC says in its complaint that you rushed that process, that Coinbase actually started fairly conservatively with Bitcoin and with this.
I think it's kind of funny that he asked that question, like pointing the finger at Coinbase, saying that they rushed the process of making these listings. These guys have been around since 2014. That's 9 years. And the crypto industry has evolved a lot since then. And yet they've only listed about 250 digital assets on Coinbase. So they have been very, very conservative when it comes to what they list and when. It is a very strange question to ask based on what rivals of Coinbase have done. And I believe that Coinbase has always upheld that decision to be one of the most upstanding crypto exchanges out there in protecting their loyal customers. So I don't really like this question, but I think that Brian handles it very well.
A much smaller set of tokens, while everybody else in the space was going wild, listing a zillion things and trading derivatives and all kinds of crazy stuff. And you were pretty conservative, but over time, you listed more and more and more, and possibly let the standards and let the analysis slip. How do you respond to that?
Well, we've rejected over 90% of the assets we've reviewed, so I think that's a good start. And then I feel pretty comfortable about the analysis. I think as the SEC goes in to look at it, really as the court goes in to look at it, because the SEC has already seen all of this, I think they'll find it to be a very rigorous analysis. We have, basically a stack of paper on every single asset we've ever decided to list. And the irony of this is that we were continuously asking them during this period, can you give us more clarity? That's how it's supposed to work. Like the regulator publishes the rules and then everybody has to follow them, right? So you have to remember that there were no rules. We couldn't really get any feedback from them about, was this asset okay or was that not? Why, right? And so with them sort of abdicating that responsibility, we essentially had to create our own process. And I think we did a really good job of that, working with some of the best legal minds in the world. And so I think it's pretty unfair, and I think this is not a good fact pattern for them that a jury or a judge would look at, is to say, look, this company was formally petitioning you for clarity. They met with you 30 times. They developed their own internal framework, working with the best lawyers in the world, and you never gave them any feedback on it. And then you hit them with this enforcement action. That's not fair, and that's not good for America.
Coinbase has a venture arm that invests in tokens and other things. Does it invest in anything that's traded?
So Brian responded beautifully right there to his question, and he immediately changed the subject right there because Brian handled it so well that I think it upset the interviewer enough to change gears and try and hit him with something else to get him on. But essentially what Brian Armstrong is saying right there is that they spent millions of dollars to make sure that they were operating within the bounds of our current legal system. And they reached out to the SEC on 30 occasions to make sure that they were doing so. But a lot of times the SEC would just completely ignore their requests. So without clarity, how could they possibly know if what they were doing was right or wrong?
Traded on the platform?
I don't know actually the exact. I want to make sure I give you a specific answer, but I think most of those have been just standard venture investments in startups.
So that's not a factor in the listing decisions, is whether Coinbase has or doesn't have a position in the company or the token.
Well, we don't take any listing fees, and as far as I know, on the digital asset listing group, they don't look at our personal Coinbase venture investment. It's not a factor.
You talked about the rules and the clarity and what the rules should be. What's wrong with the Howey test? It's been around for since 1946. It covers a whole lot of things. It started with orange groves, but it covers stocks and all kinds of stuff, and has been deployed in a bunch of different places. And the original kind of idea of it was for it to be flexible. It was not supposed to be, we're going to make a determination about this specific thing. It was supposed to be flexible because the court knew that securities and trading would evolve over time. What's wrong with it? How does it fail to count for the specific needs of crypto?
Yeah, so I think it's a great starting place, and we basically need case law to sort of help us understand some of the nuances of how this applies in a crypto environment. So an example is that in crypto, for many of these assets, there is no common enterprise or central authority that would be responsible, say, for issuing disclosures or something like that. Like the Ethereum network, there's not any one group that controls it. It's decentralized, right? And so we actually, we put out this petition to the SEC. People can Google it if they want. I think it's Coinbase petition to the SEC. You can kind of read it. And we actually, a lot of these are really technical legal questions, but there's about 40 different areas where we felt like the current law was a little unclear on this, like, decentralization, utility. What does that mean in context of open source software, right? Who would issue the disclosures if there's not a common enterprise, right? So there's a lot of open questions like that, which we don't feel have been answered, and that's the kind of clarity that would be helpful.
Do you think that there is a role for those disclosures, for that kind of information to investors? Because right now there isn't, right? There isn't any disclosure about any of these tokens besides white papers and other stuff.
Yeah.
Certainly not standardized disclosure. Do you think there should be some disclosure, leaving aside who does it or how it happens?
Yeah, so for crypto securities, absolutely, there should be the normal set of disclosures. Even for some of these things which may be classified as commodities, I think disclosures could be an important part of that. And actually, one of the nice things about crypto is that you can actually go look at a lot of this data on chain. It's public. There's a couple of companies that are trying to find ways to sort of better aggregate it and sort of say, okay, here's the distribution of all the people who own it. How long have they owned it? What price did they buy it at? Are they insiders or are they, just third parties? And trying to get better insights. So anyway, I think that kind of thing is really important. And again, it needs to be updated for this new technology, which is a little different than what's come before.
So it sounds like what we're talking about here, though, is a question of degree, right? So there are some, back to the sort of baseball card and apple thing, there's a big hazy middle there, and the SEC would like to put the line here, and you'd like to put the line somewhere to the right of where the SEC wants to put the line. But fundamentally, you're still thinking about the distinction between commodities, which are okay to trade in the way that you trade them, and securities, which shouldn't be. It's just a question of where the line should be. Is that right?
Yeah, I think this is what the courts and Congress need to figure out is where should that line be? And honestly, reasonable people could disagree. There's probably somewhere there, And ultimately, our goal is we're already licensed by the CFTC, and we have the dormant license from the SEC. We would like to be in a world where we're just licensed and regulated by both. And it's a healthy market structure. And, maybe some of these assets would start as a security and they'd migrate. The McHenry-Thompson bill that kind of came out last week contemplates this idea of, maybe we could actually have one exchange where both commodities and securities and stable coins, and by the way, there's other things in crypto too, artwork and identity and all kinds of things. So these could all kind of coexist on a regulated platform. And so if you do have a new technology that comes along, it doesn't quite look like A or B, it's some kind of hybrid, that's probably why we need new legislation.
So if the line gets drawn.
I really like that answer that he gave, and I think it's a great summation of the entire interview. It shows why Coinbase thinks that they have a fighting chance of bringing this to the court and winning. And honestly, I do believe that they will win because there is a very gray area when it comes to crypto based on previous laws that were written way before cryptocurrencies ever came around. There is a very fine line between what is a commodity and what is a security. And I think that cryptocurrencies fall on that line, especially when you have a lot that are completely decentralized. Now, there is the argument that a lot of these did fundraisers to get where they are today. And you could say that that would label them as a security, but then you have to factor in everything else that they talked about in this interview. So I hope that this gives a little bit more clarity on why the SEC has filed these lawsuits and what companies like Coinbase are doing to make sure that we get the clarity that is needed in the future. I definitely stand with Brian Armstrong and Coinbase on this issue, obviously, because I am in the crypto market. I love everything about crypto, and I hope that they win this case. I really do. That's going to be it for this video, though. Like I said before, if you enjoyed this video, please be sure to hit that like button. And if you haven't already subscribed, please hit that subscribe button down below. Thanks for watching. Crypto Clay out.